All right, Ken Orange Theory Trader back with you with the 3x3 setup, a deep dive. Okay, so this is for serious students, but we're not going to waste time. Let's get right into it. So what we're going to cover in this presentation is going to be the basic 3x3 setup, the 3x3 continuation trade on the daily chart, and then some live chart examples with my thought process. We're just going to look for some, and I'm actually going to show you how I spot them and just, add to just build the belief. So remember, 3x3 setup. Okay, after three solid candles, we're looking for a reversal at the high or low of that day. Price does not have to close back inside the candle range theory range to take an entry. All you have to do is look for the lower high of two subsequent closes in the same direction afterwards in the best case scenario. Okay, for three candles total. Okay, that's what we call it 3x3. Ideally, the money candle forms the low of day or week, or the high of the day or the week. And sometimes it can also hit a key price level like yesterday's low, prior week low or high, things like that. And I'll show you that. So we'll get into that. So let's go ahead and keep going. So here is the first part of what we need to understand. So the 3x3 on the daily or 4-hour time frame. Okay, I don't trade this in any other time frame. I don't look for this on the 1 hour or the 15-minute. No. Okay, daily or 1 hour. I'm sorry, daily or 4-hour. Okay, it has to have three new lows, one after the other. All right. And for just, even though this is a bearish example, it's just the same thing in reverse for a bullish example. Okay, three green candles, three red candles. Okay. Now notice though, these candles are not weak. This one has a long, strong close to the downside. It creates a low. The next one creates a new low. It closes below it. And then the next one creates a new low. Okay. This third candle here is going to be our range candle. This is candle number one for the candle range theory. Okay. Because remember, every candle is a range, but every range isn't worth trading. So what we're doing, the objective in trading the candle range theory, the number one thing that candle range theory traders struggle with is finding a range to trade off of. This is the best range to trade off of in terms of your odds of success. Will all of them work? No. But your best odds are here. Why? Because you've already had three strong movements to the low. So at this point, all you're looking for is a price pullback. We're not talking about trend reversals, just a pullback from the option from the price action, because we know price does not go down forever. It does not go up forever. Okay. So the money candle after this trade occurs, after this trend occurs, okay, so you got 4, 8, 12, or you got Monday, Tuesday, Wednesday, or Wednesday, Thursday, Friday, whatever, however it works out. The days don't matter. Okay. What you're looking for at this point is for price to go, let's go to the next one, below this candle's low, okay, to create a new low. After all these lows, is going to cut the low one final time and then spike up. Okay, that's all we're looking for on the 5-minute chart. 5-minute charts for entries. Okay. When the price closes above the candle that creates the low of the day, that's when you enter. Your take profit can be half of the candle range, half of this third candle, or it can be the whole thing. Either way, up to you. Okay. There's no guarantee it's going to get up here though. So just keep that in mind as well. Your odds are best in the middle of the range. However, sometimes it gets up to the top. You never know. Okay, so this is how it should look roughly when it's done. Okay, so you start with this and you should end with this. Okay, so this is 1 to 2 candles, you should be out. Sometimes this price action will come all in one candle and it'll go straight up all the way up to the top of the range. Other times it'll take a couple. It'll take 4 hours here, 4 hours here, or it'll take, let's just say this is Monday, Tuesday, Wednesday. Let's say this is Thursday, and then this will be Friday. You'll see that as well. Or you'll see, Tuesday, Wednesday, Thursday, Friday will do this, and then Monday will do this. But either way, you get the point. 3 days down, 2 days up, or 4, 8, 12 hours down, and then 8 hours up. Okay, either way. So let's look at a real example here. So this is from Aussie New Zealand dollar. Okay, daily chart. So what do we got? We got a low. This candle has created a low, right? Then the next one is another low, and then we got a very strong close to the downside. So we got low, lower low, and another lower low. This candle right here is our range. So we mark it out. Candle range theory high, candle range theory low. What's next? We need to see that price dip below this range low and then create a money candle at the low of the subsequent day. So this is the 5-minute chart. Now, it did chop around quite a bit. Your best entry would have been right here at about 405. The money candle happened at it was during the not even Asia session. It was before Asia because this is a 5 minute chart. This is the start of the day right here, and price just whips all around. But this right candle right here, the candle that creates the low of the day is the money candle. So that break is very important. Once price closes above it, the low of this money candle should hold. See how this price action here, this low it never even gets touched. But obviously you can't enter down there, so we have to wait for sometimes a retracement. So you see some retracements here, retracement here, a little bit of one here, but by here it's a little too late. But the best entry would have been at 4:05 a.m. Okay, so if you missed the first break of the money candle, which was all the way back here, then this is the type of price action you're going to be looking for. This or this. This was really the best time to get in, here or here. Okay. Now, if we zoom back out, this is back on the daily chart. So Tuesday, this was Monday right here. So this you got what is this? Monday, Friday, Thursday. So this was Wednesday, this was Thursday, this was Friday. Monday did this. Tuesday retraced. Okay, to make you think it's going short. One more time. Anybody who looked for a continuation short got destroyed on Wednesday. So the main move didn't come until Wednesday. This is a little bit of a variation from what I just showed you. Let me get a drink of water real quick. But the same price action still did occur. And it almost hit, I think it did eventually at the top of the range on the next day, but this is the meat of the move right here. So from this entry, if you would have entered on Monday and held till Wednesday, it rose 130 pips from the entry. Okay, and this is your move right here. I strongly recommend that if this you can hold it if you want, but I mean, if you get 130 pips on one trade, like, and your stop loss is like say 20 or even 10, like how much that's enough. That really is enough to me at least. I'm not greedy. So that's that. Let's take a look at a short example. So what we have here is a high. Okay, remember, we're not going from the candle's body close. We're going from the very wick, okay, the top of the wick. We have a high, then the next day closes above it. But does the next candle close above this wick, the prior day's high? Yes, it does. So now we got 1, 2, 3. So we got two subsequent closes in the same direction. So now we can start thinking, okay, maybe it might be time for a pullback. So we mark out candle three's high and low. And we do what do we look for? Price action to go above and then create a money candle at the high of the day and then crash. So the best entry here would have been around 8:30 p.m. This was on dollar yen. Okay, this trade actually took place today as of the filming of this video, and yen's dropped hard today. I got a piece of it, but I didn't hold for the whole thing. I should have. But anyway, best entry would have been at 8:30 p.m. because price went above the high and then closed right back inside of it and never came back and tanked. Okay. So sometimes with daily ranges, these can happen at any time. This is not the 4 hour chart. So when this is your price action for the day, you know, sometimes you're gonna have to watch it. If you choose to go the daily route, it could really play out at any time. Sometimes it could play out early Asia. Sometimes it'll retrace in London. London may give you a little bit, but typically by London, if it doesn't play out by London, or if you don't get in by London, USA is just going to be like a straight tank session, like it is right here. So, are there ways to enter this? Yeah, sure. But do I try to trade that? No. I want to be in as close to the high of the day as possible or around the daily open price. This right here is the daily open price from the Mark Levels indicator. So, you see anybody who went short above the daily open cleaned up. Okay. So, but in this zone, typically right here worked out for this one. Okay. And then it broke out of the range, dropped 157 pips, just an all day drop. Classic pump and dump. So price pump Tuesday, Wednesday, Thursday, and Friday just dumped, right? So anybody who went long here and here, toast. That's what we like to see. So when you're trading the 4 hour chart, here's what I like to see. I like to see the first three candles of the day. Where I am on the East Coast, it's the 1700, which is 5 o'clock Eastern, the 2100, which is 9 p.m. Eastern, and the 1 a.m. candles do the fresh cuts to the low or to the high. Okay, it's just the first three candles of the day. Then I start trading at 5 a.m. Now you can see the 3x3 video on this channel for more info on that, but you really don't have to because I'm putting everything in here since this is a deep study on it. So that's what I like to see. So if I'm trading a 4 hour chart, it's still the same price action. It's just this would be the first candle of the day. This would be the second candle of the day. This would be the third candle of the day. Then I'm thinking, okay, we got three strong closes. Time to start going short. But it's just on a 4 hour instead of a daily. That's all. That's it. Okay. So, whoops, went a little too far there. All right. So, like I said, you can see the 3x3 for more information on that. So, Let's talk about the 3x3 continuation trade. Now, what is that? On the daily chart, you're going to see sometimes where you'll get 1, 2, 3, and then this candle here gives the high and then closes. But would you believe that you could also trade this candle right here? Okay. This is the finished product for a complete 3x3 daily pattern where you just have 3 candles up, 2 candles down. Okay. The goal of this trading setup is to catch a continuation from this high, right? So let's take a look and see what entries are offered on this day, because remember, they're not guaranteed, but this is an option for you. So this is the 5-minute chart of this day right here. This last red day, this is how it looks on the 5-minute. So we have our money candle. You always want to mark the money candle first and foremost whenever you come to the chart. Remember I talked about the daily open. Anybody who went short above the daily open right here and right here, price spiked the daily open and then just straight dropped. Okay. Best entry would have been around 4:15 a.m. Eastern Standard Time. Anybody this, good clean entry there, or even up there with that pin to the daily open, and just a tank move. Okay, just down, down, down. Okay, with no hope in sight. Now, another option you could use is this, fair value gaps. Do I use fair value gaps? Very sparingly. There's other channels that talk about that in depth. Sometimes they work, sometimes they don't. But if you wanted to go that route, you could have gotten in. There were some gaps that held between 6 and 7 o'clock hour, right about here. So it's a little further away from the daily open. But you want to see a retrace and then some momentum, and you really just want to capitalize on the momentum. Whatever momentum that you can get, then take advantage of it. So these fair value gaps right here on the 5-minute chart did hold up. Another slight retrace here, and obviously these step gaps did stay intact. So that's the main thing that you want to see, is that once a gap gets created and then comes back into it, it shouldn't get filled. It should stay intact if the momentum is valid. All right, so that's that one. So that's another option. So you have just the regular entry there, and you try to scale in as you can, or you can use fair value gaps as a guide. Either way is fine. Okay. Now here is a long example right here. So you have 3 days down, low number 1, low number 2, number 3. Candle 3 is my range. We have our money candle here. Price doesn't do much, and then the next move comes right here. Okay, so this is 3 candles down, 2 candles up, roughly. All right. So let's look at this green candle on the 5-minute chart. This one right here, the last green candle in the sequence. So the best entry would have been at 8:55 p.m. Remember I said with the daily chart, sometimes those moves can come kind of early. Okay, that may be good for people who work a job. If you're off during the nighttime, try to catch these. These are at night. Hopefully after maybe the kids are gone to bed and you're off work. So try to see if you can catch these moves right here, because sometimes they do happen in the evening. Okay, so but best entry here would have been 8:55 at night. Price did rise 60 pips from the entry. And so it went up and then it retraced a little bit and then popped up again. I don't know if this was news driven or not, but the price action did work out. We did have a fair value gap that would have gave a good entry signal as well. But again, with these types of move, the best move was all the way back here on this money candle, and then you just catch a retrace when and where you can. This fair value gap never got touched, but this one did. So there you go. All right. And then obviously, if you scale into the position, stack some decent entries in here, try to keep them close together. This pullback would not have even touched your entries right in here. Okay, so that was that. Now, here are some things to note. Sometimes you will not get a new low. What do I mean? You have one candle here, another candle here, even though this one didn't close below the low, so this isn't the best example, but you'll see where you'll get 3 red candles, and then you're going to wait for this low right here to get rated. Sometimes it won't happen. Sometimes price just goes straight up, boom, like that. There's no trade here, okay, because it didn't do exactly how we're looking for a price to act. So, oh well, that's going to happen though. You're going to see, okay, great, I got 3 reds. You can set a little price alert here, do whatever you're going to do. But this was it. This was it. And then bang, it just killed everybody who went short. There's no trade there. Okay. There was not for the way we trade. So you got to get over that. Now, there also will be times where your trade will work out, but it won't complete the range. And you're going to be counter trend trading. What do I mean? Here it is. Let's start at the far left. You got 1 candle, 2 candles, 3 candles. 3 lows got cut, or 2 lows got cut. That low, and then this low right here. Candle 3 is our range candle. So price went down below. The low of the day was right here, and then closed up. right here. Excuse me. Pardon me. Price did go up. So remember I told you in 1 to 2 candles you're out. That's candle 1. That's candle 2. It pinned the weekly open, and then but trend for the week was down. Anybody who still held long after this got destroyed. Okay, but that would have been your entry had you just taken that up to here and this green candle close. You would have gotten 50 pips. Okay, so what are your options with something like this? You can always take profit at the weekly open price. You can try to set a price limit, say 50 pips, and I'm good with that. You can set your stop loss to break even, so that way, even if you do see this price action, you don't lose anything. You can also take partial profits. So that's part of risk management. But don't let a trade like this turn into a loser. If you're up 50 pips and still lose, that's unacceptable. Okay, at least set to break even, bare minimum. I'm not saying you recommend. I don't even recommend. You don't have to take a partial, but at least set it to break even. Okay, because there's no excuse to be up this much and then still lose. That's not it. Okay, so color itself isn't enough. Be sure you can get 3 new highs in a row, or 3 new lows in a row for the best odds. Let's take a very close look at this, because some people, they'll look at 3 candles green and just start going short. No, that's not what I'm teaching here. Notice here the wick of this candle's high this day. This is a daily chart. This did not get closed above. This candle wicked it and then closed back inside of it. That's invalid. When you see this and a wick that can't break the high, that's not it. This is what you want to look for. See this candle right here? Even though it's small, there's a new high right here. Then the next candle, boom, pops up again. Yes, all right, new high, closed decidedly above its prior day. And then bang, we got a big candle here closed above both of them. This is the 3 candle pattern we're looking for. 1, 2, 3. High, higher high, another higher high. Okay, all in a row. Now we can mark this range. This day high, this day low. And what do we get? Price action to the downside. Good for a 45 pip drop. Okay, that's good enough, right? Now, can you take a continuation trade off of this? Sometimes you can try, but again, continuation trades aren't guaranteed. They're just not. Your safest bet is getting this high right here and just writing it down for that one day, okay, or that 4-hour period. If the 4-hour period comes down, and actually this is a 4-hour chart, I'm sorry, not a daily chart, but if this happens where you get the 1, 2, 3, and then it just pretty much gives you a railroad track, that's good enough for me on a 4-hour chart. Okay, so I apologize. This isn't a day, so disregard the continuation trade aspect of it. That's only for the daily chart. Okay, so sometimes the low of the day won't make a new low with a close. And what do I mean by that? This range right here, this low, did not get closed below, but you still have a setup here because you have 1, 2, 3 candles. This candle made a new low, made a low of the day here. And then you got this price action, and then 1, 2 candles, really 3. This one did pay out, right? This one did pay out. Now, would I build my fort on this? Would I, make this the foundation of my trading, this type of price action? No. It's just sometimes you'll see where sometimes the low doesn't necessarily get closed below, but at the same time, the trade will still play out because you got 3 candles here and then a peak low, and then price reversed off of that or pulled back. All you're looking for is just pullbacks. That's it. And sometimes the pullbacks will happen like this, where it doesn't necessarily create a new low, but it did go all the way down here. So I promise some people went long here and then they got destroyed. The real move to the upside was right here. After these 3 candles, 1, 2, 3, this is your trading candle, and this is where you're taking your profits. This is a daily chart though, okay? So this also would have been decent for a continuation trade either here or here. Either one of those 2 days would have been fine. So, but again, the main thing I want to focus on is this price action right here. Sometimes candle 2 won't necessarily close below candle 1, but it'll still lead to this reversal and then up to tap or at least approach the candle range theory, the high of candle 3. Okay, in this sequence. When I say candle 3, I'm not talking about this candle over here. I'm talking about 1, 2, 3. This is the range candle. So we got the range candle. Some people call it manipulation, whatever. And then the move to the upside. So the best thing to see though is still, let me go back. It's still going to be this: a low, close below, close below. This is the best. This is like second best or distant best. This is like if you like really don't see anything else, you might say, okay, well, if I can get another strong close, maybe I'll start trying to trade at this candle here. But again, this is a daily chart. Just use some discretion. Do what you can on that. But this is like second best. This is not the very best type of candle range theory to trade when it comes to the 3x3 pattern. All right. So some trades will fail. That's fine. I'm going to show you one right now. You have a low, lower low, close below it, strong close below. So now we're like, okay, this is our range. Let's start trying to go long. Anybody who went long here, they got a little bit of profit, and then price went immediately to the downside. This is a daily chart. Okay. This setup was right. I would have taken this long all day looking for this low right here. That's the entry. It was a stop out. Okay. It's going to happen. But if you keep your losses small, the stuff like this, when it happens, it won't, you just say, hey, sometimes it works, sometimes it doesn't. But that's all. But I promise if you manage your risk, you'll make more money than you lose. But just know this is a completely a possibility because the trend is just down for that time period. All right. And that's it. So you just look for another one. Okay. Now, the pattern can play out at any time, but still set your trading hours. You really don't want to trade 24/7. Okay. You won't catch every move. Okay. Now, this is a 4-hour chart, though. You'll see here you got one strong close, number two. Number three is our range candle because we have two closes below. So here's the money candle right here where it created a new low and then retraced. And then boom, just a smooth ride to the upside. It actually broke out of the candle range, so that's awesome. And it went up 153 pips. So this was the 5 a.m. candle. This was the 9 a.m. candle. This was the 1 p.m. candle that created the opportunity right here. So this trade took place between 1 p.m. and 5 p.m. Eastern Standard Time. So this would have been an overnight hold, but then this was here just straight rise. So that would have been a great trade, but it happened a little later, at least than I trade. I don't really try to take trades in the afternoons because for the most part, the main move of the day has already taken place, either during the London session or early New York session. So am I looking for trades at 2 in the afternoon? Not necessarily. But can it happen? Yes, it can. Okay, now, very important. Stay out of this type of price action. This is clearly a trending market, right? Clearly a trending market. You see a bunch of little small candles like this that are barely breaking highs. Yeah, this was a pretty strong close. This one barely didn't break the high of that one. Barely breaking the high. Yeah, this closed above it. This is a strong close, but does it really qualify? 1, 2, 3. Yeah, possibly could have went short here. But at the same time, anybody who went short here just got destroyed. And what's the main giveaway for this? These little tiny candles. We like to see large candles. We want to see speed. So let's compare these tiny little trending action to these larger candles. Boom, boom, boom. Okay, this is what you like to see. 1, 2, 3. Okay, boom, 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 all in a row. Not little tiny baby steps like boom, 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 boom. No, this is not it. Okay, we want to see strong, decisive moves because think about the psychology of it. To use a term from one of my earlier teachers, if a market maker wants to solicit people to go long, they're not necessarily going to do things like this on a nice clean trend. They're going to pump that price up to get you to buy, buy, buy. And then right when I got everybody trapped, the last batch of suckers right here, then I tank. Okay, this right here is not a very exciting market. But this right here gets the people going because they're buying, 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 buying. And when you see this, you need to be thinking, I need to sell, 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 sell. Because this is not sustainable. This is not sustainable. This is sustainable because they're so tiny. See how that? Yeah, that's not a lot. That's not a lot. Nice and smooth, no problem. This right here, we can't do this forever. We got to go down eventually. Okay, and the same thing because this right here is not going to be forever either. But if you notice, what's the curious thing about this? You see this line right here? That's the weekly open price. All they did was pump price and they put it right back where the week started. Didn't even move. Didn't even move. So how about that? So what we like to see large closes, decisive closes up, and then this is where we start selling right here. This is a daily chart. That's at the high of the day. We look for the little money candle on the 5-minute chart and we just ride all of that down. Okay. So let's take a look at some live examples on the chart. Let me get a drink of water real quick. We'll head over to TradingView. It's Ethereum there. That's tanking hard, but I'm going to look at some Forex pairs for now. So let's start with the daily chart, and then I'll try to go down to, then I'll do some 4-hour ones, and then that'll be it. We'll wrap it up. So we'll do a major. Let's go pound dollar. I'm just going to pick a day at random here. Let's say let's go to the 17th of July. Okay, fine. All right. Get rid of this. So what am I looking for? The power of 3. That's all I'm looking for. 3 strong closes in one direction. So what the first thing that catches my eye is actually this one right here. Here's a low. I'm sorry, rather, here's a high. Let me do this. I'm going to start right here. This right here is a high. This right here is another high. This right here is another high. So what would I do? Mark it. Candle range theory high. Candle range theory low. Replay. Let's check our entry. Now, because this is a daily chart, remember I said the daily trades, when you're doing the daily chart and you see a strong close, especially if the close is near the high of that day, that trade is probably going to play out around 8 or so. So let's see. This is pound dollar. Remember what I talked about with the daily open? Anybody who went short above the daily open, this line right here, you see where it says DO, that's the mark levels indicator, daily open. Anybody who went short above the daily open got a good trade in. All right, but let's see. This was in the 7 o'clock hour. Like I said, we try to at least wait till like 8, 9-ish, sometimes late as 10. I would set a price alert and see. But you had price go above and then below. You had a couple money candles that possibly, it may have stopped you out depending on how tight your stop was. But either way, if you would have got in, the best entry, we mark our money candle was right here. And I'll make this a little bigger. Okay, so money candle happened at 21:35. What is that, like 7:35, I think? I'm not sure. And then price closed below it right here at 21:45. Okay, so this is still during Asia. Right, the best entry would have been right here. When price closed below the money candle on the 5-minute chart. That's your entry. Came back and tapped it a little bit, but you could have got away with a stop loss of, look at that, that's 5 pips to the high. But I say a 10 pip stop loss just to be on the safe side. And price didn't even bother to come back. So now let's go back to our daily. And look at that. That was your entry on this pair. After seeing the power, not the power 3, but the 3x3. I see a high, I see another high, I see another high. I think short sell. Okay, I'm thinking sell. When I see this price action above the day's high, right, it has to create another high. This high has to be rated before I start shorting. If it stays below the day's high, it can still tank, and it's just not a trade though. I promise though, you'll probably see this and still want to get in, but don't. Your best bet is for it to get one last batch of longs and then tank. Okay, but will it sometimes, can it straight drop? Yes, it can. All right, now let's take a look at the continuation trade because it kept dropping. Bang. Remember, our daily trades, our daily chart can give a continuation trade. So this was day 1. Now this is day 2. So let's go back to our presentation just to refresh our memory. Get a drink of water. Yeah, okay. So continuation trade. See here, 1, 2, 3, and then 2 days down, 1, 2. So this one right here, this is our only day. So let's go down to the 5-minute. And where was an entry on our continuation day? Daily open is a good bet for the continuation trades. That took place, 2000 hours is 8 o'clock. My military time reminiscence just failed me. But 8 o'clock Eastern Standard Time, 8 o'clock p.m. Okay, so like I said, if you work and you're off during the nighttime, this would have been good right here. You could have got in at right at 8 o'clock. But I'm sorry, let's mark our money candle. High of the day was made right there and did not get disturbed. So you had a good window from 7, well, let's say from 8 o'clock to about 9. So you had an hour. You had a whole hour to get in. Okay, but this blue line here was our money candle. Let's just say our entry would have been like right here after it pinned the daily open price. And then it tanked for at a max drop of about 91 pips, right? So I'd say that's pretty decent. Go back to the daily. All right, so that's what I'm looking for right there. So that is power 3 on the weekly, along with a continuation, 3x3 continuation on the daily. Okay, let's get rid of this. Let's do a 4-hour example on a different pair. I'll exit here. And I'll see if I can find a long example. So let's do dollar CAD. I'm just guessing here. All right, so if I'm doing a long example, that means I'm looking for the 3 reds that actually pay out. Because see, you got 3 reds right here. 1, 2, 3, but there's no new low here, so that doesn't count. So let's see if I can find another one. This is close. You got that's a low, that's a low, that's a low, but here again, no new low was created after this. Because you like to see 1, 2, 3, and use screenshots as a reference just to make sure you're doing it right. I still do this to make sure, okay, am I getting the pattern right? Let me go back. Here we go. Does the trade that I'm looking at look exactly like this? And the main thing I notice is that right here, 1, 2, 3, but see there's no more price action to the downside here. This third candle right here should not be the low. There should be another low after it. If this was my range candle, this candle should have got rated for this pattern to play out. That didn't happen here, so that's invalid. And like I said, you will see price still come up, but it's just this is not my trade, so I got to keep looking. Again, small candles here. Small, we don't like that. I'm probably going to look for another pair in a second here. This one here may have just been a loser. Yeah, no, because I like this price action here, but you got a low here. This one didn't exactly close below it, but this one did. But anybody who went long right here got toasted. So not ideal. All right, let's try another pair. Let's try Euro New Zealand. Okay, we're still on the 4-hour chart. I'm looking for a long example. So I'm going to see 3 strong red candles to the low. Let me get rid of this. Okay, I think I got a winner. Hold on. Let's see what we got here. I could be wrong, but we'll check and see. And what do we got? That's 1, 5, 9. The timing's a little off, but I'm just going to go for it for the sake of the price action. Yeah, this isn't ideal, only because at 5 p.m. Eastern Standard Time, the range, not the range, but the spread is so high, it's not even worth trading. So I'm going to have to forego this one. I'm not taking entries at 5 o'clock. But you know what? Hold on. Because the spread calms down between about 6:30 or so Eastern Standard Time. So let's you know what? Let's do this. 1, 2, 3. Yeah, no, that doesn't qualify. Forget it. I stick to 3. It's got to be 3, not 4, not 5, not 7. If it's not 3, if it doesn't show me what I want to see when I want to see it, I'm not messing with it. It's got to behave exactly as I dictate, because it's the market. Make the market earn your money. Don't just trade every single thing that looks good. No, make them work for it. Short price action there. Almost, but not quite. Nope. So I could have an easier time finding longs. I'll tell you what, this is Euro New Zealand. Let's try New Zealand something. And see if we can find a long on that. I'll try New Zealand dollar. Close here, but not quite. Well, hold on. It's so tepid, but I'll take it. So here's the deal. There we go. We're looking at this price action right here. 1, 2. Well, actually, here we go. This is candle 1, candle 2, candle 3. All right. So this is my range candle right here. Candle range low, candle range high. Okay, let me do my reference. Sometimes, and keep in mind too, sometimes this candle will still close red, but this fourth candle, okay, in the series 1, 2, 3, 4, okay, this fourth candle, this low should hold, right? This candle does not have to be green. Sometimes it can be red. That's fine. And that's what happened right here. This candle closed red, but this low between 9 and 1, it held. That's valid. So let's go to our entry. Actually, let's do the replay and see what we can see on this one. 5 minute. I want the low of the day. The low of the day came at 12.15. It's a money candle. The close above it happened in the very next 5 minutes. So your entry would have been at 12.25. Okay, so I'll get rid of the money candle. We see that, so that's fine. We don't really need that anymore. Now I'm just concerned about the entry, so let's go back to the 4 hour. Right, so this is one of the ones where it didn't pay out a lot is the thing, because if we like to say in like 1 to 2 candles we're out. This is still outside of our candle range, so it's really just a counter trend trade. Let's see how many pips it did give though before it started coming back. You see, it rented the range a little bit and then just started coming back. I wouldn't try to hold it this long, because remember, you like to be out in like 1 to 2 candles. And this possibly might have even been a stop out on this candle here on Thursday. This was Thursday at 1. And then during Asia, it did tap back down into it. So let's see. 12 pips. If the stop loss was completely outside of the range, at the most, you would have got about 30 pips out of that before it started coming back down. So it did go inside the range a little bit. But as we can see, bang, all that, so again, stop loss, okay, or take what you can get. But yeah, that one right there didn't really work out all that good. Okay, so let's do one more on the daily and then we'll wrap this up. But this is I'm just thinking out loud, showing my thought process for the power of 3. So let's do, I don't know if I did Euro Aussie or not, but I'll try pound Aussie. And I'll just do the first one I see, be it long or short, it doesn't matter. So we're looking for a 3, the 3x3. So I'm looking for those 3, and then that fourth candle making the low. Close, but not quite. No. Close, but not quite. Close, but not quite. Okay, so here's the deal with this. I'll do this one and then I'll end on this one. These have some strong closes, but the 3x3 didn't play out until about right here. One high, another high, big strong move to the upside. All right, that's going to be your bread and butter. But as you can see, that would have been to go short here. Still would have been counter trend because price kept right on rising, but you still could have won this one over a 2-day period. And I'll show you how. So we'll do the replay, select the bar, go here. Okay, so remember, high, another high, and then a big close above. Okay, so we know, okay, this isn't sustainable. I see 3. I'm thinking it's time to sell and go short at the high of this day right here. I'll drop down to the 5-minute. Where's my high of day? It happened at 1:45 p.m. So that was a late bloomer. Money candle right there. Let me make this bigger so you can see. But it can't happen. Remember I said that sometimes on the daily chart, it can happen early, but there's really no predicting. It happens when it happens. Okay. And I'm sure you might have gotten stopped out a couple times trying to find the high of day on this one, but that's why it's important to wait for a break of the money candle instead of randomly guessing where the high might be. But like say, this was once upon a time the money candle. It got broken below, but then price kept going up. So eventually, though, the money candle did show up here in the 1:00 p.m. hour. The close below it happened right here at 150. So that would have been the entry right there. And then I'm going to go back to the daily. You see how price closed all the way down there? Let's see how far it went. That's good for 104 pips. So that's fine. That would have been fine with me. So just imagine, I'll end with this. Let's say you scale in on this one. Because let's just say you took a couple losses, say $5, $10, whatever. But let's just say you could have got away with a 10 pip stop loss on that because it's above the high of the day. Okay. So that could be one entry. Then you take another entry here when it had profit. And then on this retrace, let's see if there's a fair value gap. Maybe want to employ that a little bit. I think I see one. Not quite. But actually, yeah, I see a couple down there. But let's just say right here. And sometimes what I do, if price is close enough to the gap and gives me a decent stop loss size, I'll take it. So say, for instance, entering here, if I count on this gap to hold from this candle's high to this gap is about 10 pips. It's in keeping with the same stop loss I set up here. So I will be fine with this as long as I count on this gap to hold. And that's fine. There could be another entry there. And then as I see another red close, let's just say another entry there. So you got about 4 entries. Okay. 1, 2, 3, 4. All of them in profit. And now we say it from the base position, price dropped 100. It was, let me double check to be sure. Hold on. Let me get rid of this. Go back to the daily. Let me get rid of the gaps now. We don't need that. From the top entry, price dropped. That's how you know you really got it when the candle closes and you're on a wick. Hello. Money in the bank. Yeah, 103 pips. So across 1, 2, 3, 4 positions. Okay, let's say you're risking $10 each position. So that's 10. Was that 1/10? I think, or 1 to 10 risk to reward ratio. And I'm not saying this is the norm. Okay, so don't misconstrue that. Okay, but anyway, let's just say we do that. This 10. Let me go down to here. Yeah, that's 1 to 10. So obviously, if you're risking $10, okay, on 10 pips, okay, but it's 10 times your risk. If you risk 10, but you make 10 times your risk, 10 times 10 is 100. Now, all of these are not going to be they're not going to do as well as the first position. So let's say on average, your average risk worked out to say about $8. But you can say like this would be $100 of profit. This could have been like, say, maybe, let me see. Let me get rid of this. This could have been, say, let me get that there. 1 to 9. So that could have been like $90 of profit. This could have been like another 90. So that's 100, 180. I'm sorry, is it 180? Like 300. I'm just going to round 100, 200, 300. Close to about almost $400 worth of profit. Yeah, it would have been possibly like a 1 to 8 right there. Okay, so that might have been like something like $80. But each one of these would have been worth 10 times the risk. So even if you risk something like $8 here, $10 here, $10 here, and $10 here, you just multiply all those by 10. So 10 times 10 is 100. 10 times 8 is 80. 10 times 8 is 80. 10 times 8 is 80, right? And then you add all those together when you exit all the positions at the same time. Okay? So that would have been the risk reward. And it dropped even further the next day. Now, but that would have been enough for me. But as you can see, that's a wild price move there because price came all the way back up, but then still closed down here, right? So if you had the stomach to sit through all of that, that's fine. But it added another 60 pips, so it was good. But you would have to sit through this retracement here because it came all the way back up. Now, it didn't hit your entries, as we can see there, but it did retrace quite a bit. This is the next day. This isn't our trading day. Our entries are over here. Price came all the way back up right here. Right? Now, that would have been our continuation day because we had the 3. So we're still looking for a day 2 continuation. But the thing is, the continuation, it didn't happen until the high of the day was reached, which was at 325. No, I'm sorry. High of the day is all the way back here at $2,200, which is about 10 o'clock at night. All right, so you could have got a continuation trade here for day 2. And then, hey, if you want to scale in some more, that would have been good, about 50 pips per position. Entry there. Maybe another entry there. Either way. So scaling in, it's an art. So if you can do that, and if you can handle these retraces and get good at that and compound your winnings, hey, you can do one of these a week and you're doing okay for yourself. All right. But you really got to be strategic about what you want to see if you decide to go that route. Let's just see if there's some fair value gaps that may or may not have been of service here. Yeah, and you got a few. And sometimes too, just because you see a gap, that doesn't mean the price is going to retrace back into it. It just doesn't. So, they are there, but this gap here never even got touched. It might have got wicked a little bit right here. This gap here got a little bit of action, but this one here, it barely got touched. Sometimes the next candle will spike into it and it'll just keep right on dropping. So, but that was that. All right, so let's wrap this up. Let's go back down to the in conclusion. We went through everything to note. So in conclusion, okay, I'm going to get a quick sip of water. If you use the 3x3 for your market structure understanding, you can eliminate every other setup and pattern. You can ignore the pairs that don't behave in the exact way I just showed you. Most pairs, most days are not worth trading. Okay, that's what I wish someone would have told me. Most pairs, they're either consolidating or they're trending. Very rarely are they giving you that 3x3 setup. Okay, well, not rarely, but I'll just say just one pair. You're going to see a 3x3 setup periodically on all the pairs, but if you just trade just one pair, it's going to be rare that you see it. That's why I look at all the majors and all the crosses. And then my odds are better because I just look for the same behavior across various instruments. Okay. Now, the new highs and lows should be one after the other for the best odds. Okay, all in a row. Boom, boom, boom. Okay, a good mantra you can think of is 3 in a row and you're good to go. Or after you see a high, count 1, 2, then I'm through. Okay, I see a high. Next day or next 4 hours, boom, I see another high. Next day, next 4 hours, boom, I see another high. Okay, so now I can mark that range and I start trading. Okay, if you missed the 3x3 trade on the daily, okay, not the 4 hour, but the daily chart, you can try to take a continuation trade. But be warned, those entries can be during Asia or London. If you miss it, you just miss it. You can try to use those fair value gaps to possibly catch a retrace or try to catch it if it comes back around the daily open. But if you miss it, it's no big problem because just have an abundance mindset. If you miss something today, there'll be something tomorrow. So don't worry about it. If price does not reverse or pull back at all, that means you're trading against the trend of the day or the week. So risk management is still number one because these patterns, as great as they are, sometimes they will fail. It will happen. So don't wonder, well, hey, how come this range failed? Or how come this candle range didn't work out? You were trading against the trend, period, point blank. Okay. Or they just wanted to take price further down or up before they decided to reverse or pull back. It is what it is. We cannot predict the market. All right. But I hope that gave you a deep understanding of the 3x3 model. Okay. So once again, I'll end on this image right here. Right there. Okay. That is your bread and butter. Okay. And obviously it's opposite in reverse, but you got to see those three. Then the fourth candle, that's the bread and butter. And then that's all you're expecting is straight rise, straight drop. This low must hold. Okay. If it's green, this high must hold. If it's high, up here the other way. Okay. That fourth candle, if you're trying to go short, that fourth candle has to hold. It's high. If it does not hold, the trade's invalid. Get out. Okay. But I appreciate you watching, your time and attention. Hope you got some value out of it, and have a great rest of your day.